Talk about the importance of prioritizing your construction spending as far as how what you want to spend on that house and everything. How important is that?
Oh boy, I think that's more of a question for you, Kim. I'm the guy who's going to finance it. You're the dream. You're the visionary. I'm going to go to the typical answer.
Well, then you ask me the question.
Okay.
I will say this. No, it's a very good question because, in all honesty, you have to decide what is more important.
Sure.
Welcome to the Art of Custom from Hibbs Homes. Sponsored by Pella Window and Doors and Ferguson Bath Kitchen and Lighting Gallery. In this episode, we are sharing our Facebook Live with mortgage broker Joe Schiermann of Groundwork Mortgage. We discuss rising interest rates in the current environment and discover that it's still a good time to build your dream home. Enjoy!
If you're planning to finance your custom home construction, you may be asking how the current market conditions will impact how much it's going to cost you to build. Well, financing a custom home doesn't have to be complicated if you work with a lender who specializes in new construction loans. Melody Miner joins us again. And Melody, this is where it's really important to make sure that your lender is also your advocate because they can save you some pretty good money with financing.
And the lender having a relationship with your builder is going to be important too. And that's why we've kind of built these relationships in both markets where we work. They understand how we build and what makes it different too. And we can just call and ask a question if we need to.
Another thing that comes into play, and I just mentioned it a few seconds ago, the current market conditions, you want to find a lender who really is on top of where we are today, rate activity, rate movement, where it's going, things like that. You want to find somebody who's very knowledgeable about that.
And that will educate you about the process too.
True.
Because it's not the same as a traditional mortgage. And so there are going to be nuances, and understanding those can help you in your decision-making process, as you're going through even doing selections and where you prioritize your money.
So most builders have a couple of what I call and we call go-to lenders, and that's the case for us in both of the markets in which we build. So today we're going to really be diving into the subject of lending. So I guess you could say this is kind of about the Benjamins?
And about the McKinleys and about the Grants as well.
So really what we're trying to do here is give you some really good information from a lender that we work with in the St. Louis area to help you make some decisions as you start your custom building process. So today we brought in Joe Schiermann. He's Vice President of Groundwork Mortgage, and he's going to answer some questions, or he did answer some questions, I should say, on Facebook Live recently, and we're going to share that with you today. Hi, everyone. My name is Kim Hibbs. Welcome to our Facebook Live. This is Joe Schiermann. He's with Groundwork Mortgage here in the St. Louis area, but we were just talking because you guys are actually lending across the state of Missouri. We'll talk about that in a minute. We welcome you to this edition of Facebook Live, and if you're wondering why we have microphones with pop screens in front of us, first of all, it's because of Melody. She's very thorough, very detailed. We don't want to pop our peas, but we're also recording this for our podcast, which we're going to be playing back relatively soon because, Joe, this is a very interesting and important conversation that we're about to have about mortgages. Because if you turn on the news, you turn on the radio, you open your tablet, you're going to be hit in the face with mortgage rates are rising, construction costs are rising, housing industry is slowing down. So we're going to talk about all that. But before we begin, why don't you tell us a little bit of information about Groundwork and some of the great work you're doing in St. Louis and Kansas City and across Missouri?
Sure, absolutely. First of all, thank you for having me on the show today. Appreciate the time. I'm happy to provide whatever insight and guidance that I can. So Groundwork Mortgage is a company that was built and originated here in St. Louis. It's where we call home. We have a deep trench inside of home building. We actually built the company inside of home building. We've got a lot of deep home building knowledge and expertise.
And that makes a difference when you're talking about lending.
It makes a very big difference. So we like to say that we are home builders who are inside of the mortgage market as opposed to mortgage lenders who are focusing on home building. There's a really distinct difference there.
Agreed.
Because you really understand what the customer is going through over the build cycle. It's an emotional cycle. There's some ups and downs. There's some some anticipation. I mean, especially in a rising rate environment now, where a lot of these individuals were looking at rates at 3.5%, 3% before the construction started, and now all of a sudden we're looking at rates in the 5.5% range. And so our job is to the consumers to make certain that we're providing them with the guidance and the solace that they need to make certain that they understand that the investment that they're making in this new home is the right investment. Right. So Groundwork Mortgage, situated in St. Louis, Missouri. We've closed plus or minus 6,000 newly built homes over the course of our tenure since 2014. We have licensure in Kansas, Missouri, and Illinois, offices in Kansas City, Missouri, and in St. Louis, Missouri.
So I think it's important for those who are watching on Facebook or those who will be listening on the podcast to understand that this information, what we're going to be talking about, is really good no matter what part of the country you live in. Everybody is facing the same things. You mentioned interest rates that used to be in the 3s are now in the 5s. We build in Utah, so I know that the information you're going to provide us can be used here, can be used there, can be used across the country. So that's very important. Now, why did we want to get together and talk about this? The main reason is because it's such an important topic in our industry. But the second reason is your CEO, Jeff Berger, with Groundwork Mortgage.
Yes.
I'm friends with him on Facebook.
Great guy.
He's a wonderful guy. I noticed and listened to a video that he recorded. It's about 8 minutes long. Saw this 2 or 3 weeks ago. Mm-hmm. And the way in which he explained what we're facing, how we should view this, how we've been here before, what are some of the things that we need to be aware of if we want to enter into this environment, I thought was a perfect entree into this conversation. And you have as much knowledge as Jeff does. So when Jeff wasn't available, he's over in your Kansas City market. We wanted you to fill in, and we know you're going to do a great job. So let's
do so.
Let's start there.
Sure.
The one thing that I really want everybody to understand is this is not new territory.
Correct.
We've been here before. Down the line, we're going to be here again, and that people need to understand that rates move daily, they move hourly, they move weekly, they move monthly. So don't panic. Think about what your options are and make a smart decision.
100%. And I think that one of the most important items that Jeff responds to in that video is perspective and context. Mm-hmm. It's always about context. We look at the rising rates and how quickly they occurred in 2022 from 3% up to 5%, and then all of a sudden we had that little bit of a peak at 6 1/8 or 6.3, and that's when Jeff created that video just to say, hey, let's have some perspective in this. Let's have some context because the market is going to shift. It is volatile. It's always moving, but it does come back to a normal place, and we have been there before. He referred back to 2018, in December of 2018, when rates were 5 1/4. Which is essentially where they're at right now, at 5.5, 5 1/4, and the home builders were still selling homes. Mm-hmm. People were still actively engaging inside of the market. Groundwork set a record in terms of the number of mortgages that we sold on that particular month, which is one of those things that we're very proud of because it is kind of defying the market, defying that fear that people have that, oh my God, rates are going up to into the 5s. We were at the 3s. How is that going to impact my individual scenario? And it's our job as a broker to make certain that they have that calm and ease.
And that's the one thing that I noticed when I watched the video is Jeff delivered it in such a way that he did make me feel calm and put me at ease to understand what's going on. And by the way, we are going to provide links to that video, and it should also be on Groundwork Mortgage has a YouTube channel.
Correct.
It should be there as well.
Yes, it is.
So make sure you check it out. And it's Jeff Berger. He's talking about kind of the history of interest rates and how we find ourselves where we are today and that type of thing. And talking about that, the one thing we've talked about is him being very calm, putting everybody at ease. But this is a stressful time. So if you do take the time to step back, really put things into perspective, as you've mentioned, to kind of sum everything up, and then we'll dig into more details. This really is still a good time to think about building a new home.
Yes, 100%, because why do people build a new home? They build a new home because of the investment, the investment that they
the long-term investment.
The long-term investment. And, year over year, over the last 25 years in the St. Louis market and the Kansas City market, the investment that people have made in these homes has led to a growth and appreciation of the value in that home of 5% year over year. So when you have a small incremental jump in the interest rates, you're talking about an increase of $150, $180 per month. But if you take that 5% on, say, a $500,000 home, you're gaining $25,000 in terms of your investment in that home, that asset that is appreciating. So the $2,500 that you're paying additional in interest is really offset by the maximal 5% gain in the asset that you're purchasing in the first place.
See, and that's such a good point, and I want to make sure everybody truly understands that yes, you will be paying more every month for your mortgage, but if you look at it over the long term, the yearly appreciation or the appreciation over the life of your loan is going to be far greater than that. Correct. So that's one of the things to put into perspective. That might be our key word today,
right?
Is just perspective, really, really understanding things. And you're absolutely right about that. Another thing, to put into perspective, you're talking about you might end up paying another couple $100 a month or $250 a month. If you think about your lifestyle, think about the importance of your home. It's where you're raising your family. You feel comfortable. You feel safe. It's your safe haven, if you will. You absolutely love your home. What's more important, having the home of your dreams or maybe cutting back 1 or 2 times a month on going out to dinner or something? I would argue, and I'm the same way, that I would much rather do takeout, eat it in my home, and save the money from going out and still build at this particular time.
Yes, 100%. And I think nothing made that more perfectly clear than the pandemic that we went through.
Good point.
People's eyes were open to the fact that the house that you're in, the time that you're spending with your family, that is the most important thing that you have. So you're going to we saw this switch of individuals who wanted to go and purchase a newly built home because they didn't like the experience that they had in their home with their family, and they were stuck there for a year. We were all kind of battling the same battle, but they realized the value and the importance of that home. And I agree with you, $150 a month, I go down to Webster Groves or Kirkwood to Billy G's and have a dinner with my kids and my wife, and that's $150 one time per month. So really perspective and context is really the name of the game.
And also putting into perspective the fact that as we tape this show and we're doing our Facebook Live right now, within the next couple of weeks, the Federal Reserve is going to meet again. And they've already said that there's going to be another very hefty rate hike. The last time it was 0.75%.
Correct.
They're expecting this rate hike to be virtually the same thing because inflation still needs to be controlled. I'm a big proponent of kind of cooling the market. I hope we don't go into a recession, but I think things need to be cooled down to kind of control pricing a little bit, to help with labor issues and all. So I'm comfortable with that. Don't want to see a recession. But I guess my point being is even if there's another big rate hike, that doesn't necessarily translate into the same jump in the mortgage industry, correct?
Correct, 100%. So when they're talking about raising the federal rate, that's the federal funds rate. Mm-hmm. And at the most basic level, that is the rate that is charged on a daily basis to borrow money at the federal level, okay? And of course, there's a trickle-down effect that goes down into credit cards, automobile loans, mortgages, et cetera. But it's really not a one-for-one adjustment. Of course, we're looking at the July 26th, 27th date. It's on the calendar. The Fed meets 8 times per year. But there's always a little bit of volatility when they meet if there's going to be an adjustment. But then there's a normalization afterwards. So I agree with you. We need to get inflation under control, but there is not a one-to-one correlation as it relates to the federal funds rate and the mortgage rates. It's really a function of the consumer price index, kind of the way that the stock market responds. These companies, these investors, these mortgages, or these mortgage companies, they figure out a way to shorten that time where they have money on the wire with the Fed. And as long as the Fed is purchasing the bonds on the back end, we should have a fairly stable mortgage environment.
This podcast is sponsored by Pella Windows and Doors. Pella is the industry leader in innovation and style. Windows have become a key element in home design, and Pella has the product and professionals to guide you to your perfect solution. Pella is cutting edge in energy efficiency, durability, and performance. If you're tired of looking through screens, check out the Pella integrated roll screen that you won't see until you need it. Pella offers the broadest selection of premium products to meet any budget and any design inspiration. Allow Pella to show you what they can do to improve the style and comfort of your home. With Pella's limited lifetime warranty, you won't have to worry about windows and doors again. Call 314-714-0100 to make an appointment or visit our showroom in Chesterfield Valley.
The one thing that we've started to hear more of and have been trying to counsel some of our clients, or I should say prospective clients, who are considering building but still are a little bit concerned about the mortgage rates and where they're going, I believe that this is an opportunity. The 30-year fixed was so popular over the past several years because those were the rates that were down in the 3% range, give or take. And I understand the popularity of them. Everybody wanted to lock in for that 30 years.
Sure.
But think about it this way. Okay, Jeff, in that video, and you've talked about how mortgage rates go up, they go down. Historically, that's what happens.
Right.
So while they're rising now, sooner or later, they're going to come back down, and we're going to be in that 3-4% again at some point. We just will be. So why not think about, okay, if I want to build now, maybe I take advantage of an ARM and get into the financing at a much more affordable rate now and wait for the rates to come back down where I can convert eventually to maybe a 30-year fixed at a much more attractive rate. Are you talking to your prospective clients about that?
It's a great point, and historically we have seen that the adjustable rate mortgages have been a little bit more competitive than the 30-year, the 15-year rates. Right now, it's defying the market. What we're seeing at the 3-year ARM, the 5-year ARM, the 7-year ARM, the 10-year ARM, basically the same as the 30-year right now.
See, I find that interesting.
Yes,
because
I
usually there's a
agree.
much bigger difference between them.
Correct. I was running a rate analysis before we came here for the podcast just so I knew kind of where the market was. 30-year fixed, conventional, 750 FICO plus or minus, you're looking at a rate of just below 5.5.
That's really not bad. Historically, where we've been.
3-year ARM, 7-year ARM, 5.5.
Wow.
Very
See, I am
interesting.
not used to that. So that's kind of an interesting dynamic that I'm just not used to.
Right. Well, those ARMs are built as more portfolio products.
True.
So the investors are saying, okay, let's hedge and make sure that we're in line here. The 30-year market is going to be sold off to the federal, as long as they're buying the bonds, it's stable. So I think that it's more of a hedge on their part that they just wanted to have an equal playing field.
But regardless, we're still talking about refinancing. Even if you get in today at 5.5 or wherever, if the market drops, you can still refinance at some point.
Correct. It's the mortgage market or the real estate in the United States is the most refinanceable asset that we have across our country. And when the market goes down, and it will, and when mortgage rates go down, and it will, maybe it's not the end of this year, maybe it's not next year, but a 2-year investment at 5.5, thinking that the rates are going to move at a lower mark, you have the opportunity to refi into the future. I'm betting on the asset every time.
Yeah. Yeah, and you're so right that, and you've talked about this, just the appreciation alone is what people need to understand, that real estate is such a good investment, and being able to build the home, your dream home that's designed perfectly for you and your family, there's a lot of benefits to that, and mortgage rates are still much lower than historically they were back in the 70s and 80s when you had 18%. You know, can you imagine if we ever faced that right now, what would happen to our industry? 18%. That is, I can't even understand it, but my parents lived through it, right?
They did. Yeah, absolutely. And in our experience, and I'm sure that it's in your experience, home builders are going to build homes, whether you're at 3% or if you're at 18%, regardless. There's going to be a market because you're driven, you're a visionary. You want to put these individuals in the home that they can celebrate with their families, celebrate their holidays, their Christmas together. I mean, that's really what drives us from a home building standpoint. They like walking through that vision with the customer and touching them over the course of their build cycle, whether it's 6 months, 9 months, 12 months, 2 years. You know, you're there along with them through that adventure. you're there with them as the home builder. And as long as we're working together, you get the investment, you get the asset, but you get the family at the end of the day with the home that you're creating for them.
And we always, I know it might sound corny, but it's so true. Our team, whether it's St. Louis, Utah, makes no difference. We truly do, and we have a kind of a motto that's building dreams one home at a time.
Yes.
Which is true. Building a custom home, there's nothing in my mind that's better, because someone who's going to purchase a home, it's the biggest investment they're going to make.
Yes.
And they're going to spend so much time there with their family, with their loved ones, that quite frankly, if you put it all, using that word again, into perspective and understand, things are going to move. Things are going to change. It's going to go up. It's going to go down. Don't panic. Don't look at it every single day. Understand that the investment up front is going to pay off in the long run. And then just also understand that this is where you and your family are going to live. You're going to grow. You're going to, love that home. What have we missed? What do you want to talk about that we might want to add to this conversation?
You just made a really good point that we haven't touched on yet. The don't look at it every single day mentality, because we're all through this journey of life together. And if I sat down and I looked at the stock market and my investments and where the Dow was going, where the S&P was going on a daily basis, I would drive myself insane. Mm-hmm. I trust the process that I'm making my investments in the long term over the course of my career, the course of my life, and I'm building that for my family. And it's very difficult to not pay attention to the rates on a daily basis.
Like the stock market. People look at the stock market every day, which you really shouldn't do.
You should not do. Yeah, 100%. But if the guiding light is the home, the asset, the dream, the family, which is really the core of what is driving our customers together, then it's a great decision to build a new home at any point in time, including right now.
Yeah. So we had a really good question come in. And what's interesting about this is we had just had a meeting with Chris Pedigo, our director of sales, a minute ago, and we were talking about that. Are there differences or advantages in working with any particular lenders when it comes to construction loans?
Sure. It's a great question. We have built our business around the entire purpose of optionality. Because we believe that people, number one, deserve options. They're going to shop. They're going to look at other different alternatives. But as a mortgage broker with access to multiple investors, we can find the right investor with the right product for the right person, regardless if they're a first-time home buyer, if they're a seasoned home buyer who's building a Hibbs home, if they're building a villa, a town. There's a million different scenarios, and we want to have a million different options for those customers.
Another question. Are the loans still available where one-time close up front and it closes on the back end, the permanent financing too?
Yes, that is 100%
because that's something
correct.
That's really taken off in our industry.
Absolutely. Nobody wants to work through the construction disbursement period and then at the end of the process wonder, what is my rate going to be? What am I getting myself into? So that one-time close is really important because you can make that decision up front on what product you're going to be at the end of the process.
And I know that there are some lenders, and you as a broker work with many different lenders and lending options, which is a good thing. But I know there are some lenders that if you lock in after your construction budget is in place, if you lock in on your interest rate, if that rate goes up, you're protected because you're locked in. But I know some lenders that if it happens to float down, they will adjust it down for you. So that's another thing to think about in this environment. Rates are increasing. Sooner or later, we talked about it, they're going to come down. And if they do come down, you're going to benefit from that.
100%. There's a float down option with every investor, so you're not locked into the rate over the entire construction cycle.
Talk about the importance of prioritizing your construction spending as far as how you want to build the house and how you want to what you want to spend on that house and everything. How important is that?
Oh boy, I think that's more of a question for you, Kim. I'm the guy who's going to finance it. You're the dream. You're the visionary. I'm going to go to the typical answer.
Well, then you ask me the question.
Okay.
I will say this. No, it's a very good question because, in all honesty, you have to decide what is more important.
Sure.
Is it the sticks and the bricks performance of that house? Are you looking for a high-performing home home that's really healthy indoor air quality, that provides exceptionally low heating and cooling bills, that's extremely durable, et cetera, et cetera? Or are those granite countertops and the fancy appliances more important? Now, you can find a happy medium and have both, but that's the benefit of working with your builder and working with your lender. Mm-hmm. I always tell people to go to the lender early, find out what level they're comfortable with as far as the total loan,
sure,
and then share that information with your builder. Don't play games. Let them know what that limit is, and then the builder will work with the architect to design to that to your budget.
Sure,
and that's where you start to truly prioritizing and all. So
well, and if you trust your builder, and you do, and you trust your mortgage provider as an advisor to help you walk through this process after you sit down and explain, this is my vision, this is what is important to me, this is what I'm prioritizing around, then it's a very collaborative approach between the consumer, the builder, and the mortgage provider, the broker, to make sure that the individual comes up with the right package that is really suited for them.
Now more than ever, it's important for you and your family to enjoy the spaces you're in most often. Count on the experts at Ferguson Bath, Kitchen, and Lighting Gallery to help you make the most of home and create a space you'll love to live in together. Shop online or schedule a personalized consultation to discover stunning products from the comfort of your own home.
Another great question, because we're a high-performance builder, and the question is how high-performance building impacts the lending process. Now, I know because Jeff has walked our job sites before, Jeff Berger, and I had him out specifically. We had appraisers come out to our job sites because we, as a high-performance builder, do focus on that envelope of the house. And by an envelope, I'm talking about if you were to take a big blanket and lay it on top of the house, it's whatever that blanket touches is considered the thermal envelope. So the roof, the walls, the windows, you want to focus on that, the insulation package, HVAC package. I also know that the lender will take into account the performance of that home when it comes to lending to the client, right?
Correct. Yeah, and as you're asking the question, I can envision Jeff Berger with his video walking around the inside of your house. I remember that. I remember the video, and I explicitly remember the most important component that he talked about was the relationship with your appraisal panel. Okay, so the broker, we're going to be able to provide the investor. We're going to be able to provide the lender. But really the most important function of that connectivity is finding the appraisers in the area that know the benefits of a high-performance home. That understand the value that it's going to add to the property, because if you have an individual appraiser that goes out there that isn't familiar with the benefits, they're not going to provide that value to them. So that's why it's so important to work with a lender that and understand has the connections, has the focus in this market to make certain that you're getting the best value and the most value out of your home.
Excellent points. Joe, you have been outstanding. My final comment is Jeff who? we didn't even miss him. No, you were outstanding. I do recommend that everyone try to find that video on your YouTube channel. We will link to it on our show notes as well. But it's really outstanding. Just the way it's presented, the information. I highly recommend that everybody try to check that out. Anyway, thank you very much for your time.
I
Good
appreciate
to have
your
you
time.
here.
Thank you.
By the way, I'm being told that Tricia McConkey, you know Tricia.
I do.
She's one of our go-to lenders.
Yes.
So Tricia, I want to reach out and say hi to you. You know Tricia through the HBA. Competition is good, isn't it?
Competition's very good. Yeah. And you know what? We love collaborating with people inside of the HBA. Mm-hmm. There have been specific scenarios where we have a customer that we may not have the right program for them, and I'm more than happy to pick up the phone and call Trish and say, look, can you help serve this individual? So it's a very collaborative environment that we work in.
Trish has helped us with Facebook Lives and podcasts, And so it's nice to have Tricia listening as well.
Absolutely.
Speaking of the HBA, I've said this on many of our podcasts before and some of our Facebook Lives. It's such a great resource across the country. No matter where you're building, use the HBA, local HBA's websites for information on lenders, on brokers, on builders, on remodelers. I think it's such a great resource, and want to just recommend that if anybody's thinking about a project, start with the HBA. There's a lot of great information there.
I would agree with that. And from a lending standpoint, gravitational pull inside of the Googleverse is really where a lot of people move. What are mortgage rates? Where can I get a new construction loan? And whoever's paying the most for the advertising is going to be up at the top of the list. But to your point, if you focus on the community inside of the HBA, inside of the home building, wherever that is across the country, that's where you're going to find the right information for the lender, the builder, whomever you're working with, because it's a really focused funnel instead of the Google of the
Totally
world.
agree. Joe Schiermann, Senior Vice President with Groundwork Mortgage. Thank you very much. This has been a really good conversation. I've appreciated it, and tell Jeff that we appreciate him letting you spend some time with us.
Absolutely. Thank you so much, Kim.
And thanks everyone who has been watching us on Facebook Live. If you've enjoyed this conversation like I have, make sure
Likewise.
you join us again in a couple of days. And thanks again, Joe. It was
Thank
good
you,
seeing
Kim.
you. Melody, one of my takeaways when talking with Joe was the conversation about appraisals and how important that is. It really is, especially the way we build high performance. There are energy efficient mortgages out there. So it's really crucial to find that right appraiser.
Right. And you always hear about a house having good bones, right? And having the right appraiser is going to be someone who understands the bones of your house and what it really is costing you to live in that house and maintain that house.
Yeah. Another takeaway, we did discuss how to find lenders. And I mentioned this before in some of our podcasts and some of our Facebook Lives. I'm really a big proponent of the HBA, and they have on their website, most local HBAs will have a website, and then on that website, there'll be some drop-down menus where you can find a new construction builder. You can find remodelers as well. So I'm always a big proponent of looking there for, as one of the resources.
And should we mention that, Hibbs Homes, we are really active in our local HBA because it's such an important educational medium for everybody who's in the industry, and we have such a great community here in St. Louis, and you were actually president of the HBA. And
back in 2016, I was president of the Greater St. Louis HBA. Wonderful experience. I was on the leadership ladder for several years, and culminated in the presidency back in 2016. But just a tremendous year. Really enjoyed it. Really learned a lot. And to your point, the HBA is an organization that really is beneficial to the construction industry and a great resource for consumers.
because it's almost a vetting tool that you can use too, right?
Absolutely.
Almost even better than the BBB. Wouldn't you
I think specifically to our industry, yes. Now, we also are big proponents of the BBB as well, and I know that would probably be my second choice when it comes to referrals. They have drop-down menus as well for contractors. So when anybody asks me for whether it's lenders or builders or appraisers, whatever, I always recommend those couple of options for them when they're looking for information.
We just talk about it a lot, so I thought maybe it'd be helpful to explain why.
Yeah, exactly. And on our website, you're going to be able to find a lot of resources that we mentioned in today's shows, including those links. And we're going to have more information about appraisers who specialize in efficient mortgage lending.
And, this was a rebroadcast of An Art of Custom Live, but we're going to be doing these more often. And so we're going to continue to let you guys know when we're going to be recording live so that you can jump on and ask questions. But you don't have to be on those lives in order to ask questions either. You can call our message line at 314-266-9709, and your question might be even the topic of an upcoming episode.
I really do enjoy those Facebook Lives that we've been doing because it gives us a chance to, well, not only, be seen and heard at the same time, but I think that it just gives us an opportunity to quickly react to what's going on in the market and help people understand what's going on in the construction industry. We've had a lot of people who have enjoyed them as well and asked some really great questions. So again, we do encourage you to let us know what's on your mind at our message line. Now, we're not done talking about the business of of construction, because next week we have another really great conversation where we're going to be talking with Alicia Kopp, who's one of our realtor partners in the St. Louis area. Very helpful information, not only about the builder-realtor relationship, but also the benefit to the realtor-client builder relationship and how she's kind of like a marriage counselor, right?
Absolutely. And one of the things that we also talked a little bit about was how realtors really can benefit in the custom building process. And so there's information even for realtors on there. Yeah. And you can find a recording of that live broadcast on our Facebook page, which if you follow, you will also be able to find out about upcoming Facebook Lives. That's at Hibbs Homes. And next week, we're going to be sharing that conversation on the podcast.
Yeah, we will. We hope everybody joins us, because if you like the one that you just heard with Joe Schiermann, this is equally as good, where we're really diving into the importance of engaging a realtor in your new construction journey, and we hope you join us then.
For more information, visit www.artofcustompodcast.com or find us on Facebook as The Art of Custom and on Twitter at Art of Custom Pod. Be sure to subscribe on iTunes, Stitcher, or wherever you get your podcasts to get the latest episodes, and please rate and review to help us grow. The Art of Custom is produced by Hug Monster Sound with original music by Adam Frick Burdine. Thanks for listening.